Welcome to the Versa Business Tips Podcast. I'm your host, founder and CEO of Versa Business Systems, Shaheen Mazloom. We're here with a very special guest today that has a lot of expertise in businesses, helping businesses get funding, investing in businesses, been doing this a very long time. Patrick Donohue, CEO of Hill Capital Corporation. How you doing today, brother?
Excellent. How are you doing?
Good, man. Good. Thanks for joining us today. I love talking money. I love talking finances. At the end of the day, as entrepreneurs, our whole game is to exit, right? Like we don't want to be married to our business forever. So I'm excited to have this conversation with you to learn a little bit more about how we can add value to our business that's attractive to investors and attractive to people that maybe want to purchase down the line. So we're not working for our business and our business is working for us. So
exactly.
Tell us a little bit about yourself, what your company does.
So my company is Hill Capital Corporation. We invest $500,000 to $1 million directly in entrepreneurial-led private businesses. And then my journey over the years has gone from investment banking, starting a couple of businesses. And then 2 years ago, I wrote the book, Breakout Valuation, helping entrepreneurs understand how to create a more valuable business. So everything I do is around entrepreneurship and finance.
Right. Now, so, obviously you deal with a lot of different types of business owners. What are some of the things that you're seeing that are pretty typical where business owners are not focusing enough time and kind of doing it wrong when it comes to looking attractive to an investor or, somebody that's looking to maybe purchase their business?
Yeah, and I know you've talked quite a bit about this on some of your podcasts because your work is so important for entrepreneurs and small businesses to really help them in the right mindset. And, I know as you've talked about it, you got to take the time to work on your business and not in it and be intentional, like with your work around helping, companies really design, what they're doing. And so one of the things I really think that a lot of founders, entrepreneurs miss upon is really being able to articulate that vision. I call it a magnetic vision. There's a lot of things that go into valuation, but especially for entrepreneurs and small business owners to be able to articulate where they're going and why they're going there, I think is really important. A lot of times because they're often coached to have a vision, but they're not necessarily taking it all the way to be able to articulate that to all stakeholders. And I think that's a good place that people can lean into, and you can always be working there to enhance that magnetic vision long term.
Right. Absolutely. I mean, I think I find it fascinating. Sometimes when you ask a business owner, well, what's the end goal? And a lot of the times they'll mention like a certain revenue. Right. But it's like, well, what's after that? Right. Like what is your very end goal? I mean, realistically, is it handing it down to your kids? Is it, creating that generational wealth, or is it, exiting at some point? Or is it, for most people, they don't want to work until the day they die, right? Like at what point do you stop, inserting yourself into the business, right? You got to have that vision all the way through. You bring up a very good point. And I mean, honestly, for me, the first few years, I didn't have that either. I think in the beginning, we're so focused on just getting the business up and running and getting to a point of being able to have a comfortable revenue, that allows us to live the life that we want to live. And then you've got to expand upon that. It's like, okay, well, where do we go from here? Right? Like, when are we going to exit? So, you guys invest in businesses, you mentioned 500 to $1 million. What are you guys looking for in terms of a business that's going to be attractive for you guys to invest that money into? What are some of the key elements that you're looking for in a business?
Well, a couple key elements. When we invest, we're investing in companies that are typically doing a couple million in revenue and are looking to double and triple sales. So, of course, the logic needs to all tie together, like the ability to be able to execute upon that, whether it's the industry, the growth model, the business processes that the business has. But the key piece to all of this is the people in and running the business. So for us, it really starts with the founders, the majority shareholders, and the team really executing upon it. Because what I like to say, it's not if things go bad, it's when things go bad. And so when things
Right.
go bad, who's going to show up and who's going to continue to
Right.
execute and have that grit? And I know you've touched upon this on some of your other episodes, but it's a lot of your work. I mean, you got to write on the side the sign behind you, right? The 99% won't, but it's like who's going to show up and keep executing and really make this stuff happen? That's at the end of the day really key for us and what we lean
Right.
into through our due diligence process.
Right. And that, I mean, let's be honest, a lot of people are a lot of talk, right? You could talk to some people that
Right.
that talk a big game and seem like they're going to show up. Like, what are some things that you do to kind of differentiate the real from the fakes, right? Like, we live in a world where social media, right? There's so many people out there that talk a real big game. I've done this, I've done that, and you fact check them. You're like, dude, I don't see you anywhere on Google. You've never been featured anywhere. Like, what are you talking about?
Well,
How do
yeah.
you differentiate the people that are legit and the ones that are really going to show up versus the ones that are just all talk?
Yeah, great question. And our not so secret sauce is that we're investing in founders who've been executing for a while. So typically,
Right,
when we invest, they've been running the business for 5, 10 plus years. When we
right,
invested in WareCorp, Chris Dykstra had been running WareCorp for 20 years.
wow,
Adele, Babies on Broadway for over 10 years. And so that's what's really nice is that they've proven the grit. They've proven that they can work on something
right,
and build up something. That's where I've always really struggled, and we struggle with something really early stage, like in the startup phase. We don't have a
right,
mandate that says we can't invest in something early stage, but that's where
right,
we get really gun shy because a lot of startups will go hard, and if it doesn't work out the minute it gets hard, they stop and they go work on the next thing. Which,
right,
hey, to each their own. I don't mind that, but it's not for
right,
us. We're not set up like the traditional angel and venture capitals where they're just going to be like, yeah, let me go fund the next thing. Sorry, that one didn't work out. It's just not our business
right,
model. So that's what I struggle with because sometimes when it's too early stage or they haven't been there, done that, they're when it gets hard, they default to giving up and moving on to the next
yeah,
business idea, and I'm not comfortable with
yeah.
that.
Right, I totally get that. So, have you guys invested in startups or the early phase before? And is that mostly because they've done it in a previous business and succeeded, or what does that look like?
Well, we've invested in a couple of businesses that are only a couple years old. One of our first investments was in GoRoute, and Mike Rowley is just a really solid entrepreneur, and he loves sports and he was a professional athlete, and so he
Right,
created a system where kids could, or athletes, I should say, could practice running routes in football using electronics. And so now
okay,
that has become all the on-field communications that they're using in softball and baseball and so forth, and they've gotten
wow,
really big. But we invested very, very early because we believed in Mike and his grit. You could just tell in the first few meetings, like Mike was not gonna. He was going to make this happen in some way, shape, or
right, one
form.
way or another, right,
Exactly. So we got comfortable with that. We also invested in Cytotherics, which is a biotechnology company that is
okay,
producing human liver cells. And so
wow,
it's really, geeky stuff that's really hard to
yeah,
understand. But at the end of the day, if a human doesn't have a functioning liver, they're basically dead because you
right,
can't. There is no liver replacement. But they were
right,
already able to show that they were able to grow these human liver cells in a bioincubator. And so we knew it
wow.
was very early, but they also had the Mayo Clinic as an investor and several other key
Oh, okay, yeah.
players
So
in
they already
biotech.
had some big name investors behind them, yeah.
Exactly. So we were able to have some of that social proof along with some of our advisors that were able to kind of validate the technology and what people were saying. So we can get there, we can get comfortable, but our bread and butter is investing in companies like Mercury Mosaics that makes handmade tile. Mercedes has been making handmade tile in Northeast Minneapolis for pushing 20 years. And so,
Right.
and that's just, it's a beautiful business. She's a wonderful entrepreneur. And, that's the more of our bread and butter who we invest in.
Right. And is that where you're at? Are you in Minnesota?
We are based out of Minneapolis. We invest
Okay.
nationwide. So we've got investments, well outside of the upper Midwest. But,
Right, right. Very cool. Yeah, I noticed you mentioned Mayo Clinic, and I actually grew up in Golden Valley.
oh, no kidding. Super cool.
Yeah, yeah. My first job was at Devani's Pizza
Oh,
and Hoagies,
yeah,
14 years old. Yeah.
that's cool. Yeah.
Yeah, man. You a Vikings fan, I hope?
Well, yes. I'd say
Yeah,
reluctantly.
it's
I think
it's
it's kind
tough
of
to
hard
be
to
a
be a
Vikings
Vikings
fan.
fan. So,
It is. But
yeah,
when I first moved to the United States, I started my first business because so I moved there in '95, and I
yep,
don't know if you remember the winter of '95 in Minnesota, but it was absolutely brutal. That was my first experience with snow. Right, we got I think a foot or two one weekend, and our neighbors couldn't get out of their house. We saw a business opportunity, 7, 8 years old, and that's where we started our first business.
shoveling snow.
And yeah,
Yeah.
shoveling snow. And then when the summer came, we were cutting grass and raking leaves in the fall. And man, Minnesota is just such a great place for business in general, right? There's so many different huge corporations based there. I
Yeah.
mean, you got 3M, you got Best Buy. I mean, you got some big players. But then you've got a lot of small businesses too that are really like I love the vibe of businesses in Minnesota. And it's very similar here in the state of Maryland.
Right.
It's a small business driven area, and so I kind of want to move the conversation to like to you specifically. Like, how did you get to a point where you got the capital to be able to invest in these businesses and take these risks? Like, you said you ran and grown businesses yourself. Is that how you got started? You sold a business for a large amount of money and decided to just go into the investment side, or tell us a little bit more about your story and how you got here.
Sure. Well, it all really started when I was 6 years old and selling, or 5 years old, selling lemonade with my cousin Chad.
Yeah.
And I have that picture up on LinkedIn. But I think about that quite a bit because that's kind of the root of where it all started around entrepreneurship. But
Yeah.
fast forward, I've always found interesting why things are valuable, including
Right.
why things can have a negative value. And so, like probably a lot of kids, I collected baseball cards and so on and so forth as a young person, and brought
Yeah.
flavored cough drops to school and sold them for 10 cents a piece and stuff like that.
Yeah.
So that was always in my blood. But then when I went and started my career, I started in the world of online trading and then equity research, investment banking. And so help
Okay.
companies go public, M&A. Of course, careers like that can be pretty lucrative.
Right.
And then I left there, had started a business. I'd never had like a huge exit. I've started a handful of businesses, but I'm like the vast majority of entrepreneurs where it's like really hard and you're
Yeah.
grinding it out and so forth. But I actually had a couple of people that I worked with in the finance world and that worked with private businesses and startups and so forth. And we knew about this, what we call the capital gap, where
Right.
businesses can't get all the money that they need to be successful. And they fall in between what they can get a loan from the bank and then what they can get from like traditional angel and VCs. And so
Right.
Kevin and John and myself started getting together, kind of chatting about it. And then, long story short, that's how we pulled together a handful of people that is our investment fund today. And we're investing out of fund two that's $25 million. And so it's all individuals. That's what's super cool about this.
That's awesome.
We don't manage any institutional money. It's all
Right.
individual money, and several of our investors are multi-generational, family-held business owners.
Very
And that's
cool.
important to us because when we invest in businesses, we like to talk to the entrepreneurs about having options. We want
Right.
them to have optionality. And so we think a lot about that fair balance between us as investors and what they're looking to achieve long term. So,
Right. Right. And now, so you had mentioned before some of the businesses that you're invested in. They also have other investors, such as you had one that said Mayo was an investor, and they
right.
had other investors. What do you think the reason is that businesses are having to go to all these different investors and groups to pool the capital that they really need? When there's obviously an opportunity, there's companies out there that have the money to do it all. Like, is that part of the investment strategy, is always just doing a piece of it? Or like, explain to me how that works. I've noticed that a lot, like
Yeah.
even with us, we, when we do lending, even though they can afford maybe a little bit more, lenders are still only going to do a portion of that to kind of mitigate the risk, even though the affordability may be there.
Exactly right. It can be very complex. And I actually, in the book, I wrote a whole chapter about these types of subjects and trying to distill it down and make it super simple for
Right.
entrepreneurs. But a lot of them will have like the institutional money. So anybody that's not an individual, I'd lump into like institutional money, have
Right.
investment mandates, like you mentioned, where they have diversification requirements. And so
Right.
there's all sorts of things, the rules they're kind of playing by, whether it's internally generated or because of regulators. A lot of times when it's dealing with banks, they can't take down
Right.
a whole deal themselves if it's so large, they have to syndicate it out. So there's different things that are happening in the background, but for most investors it is about diversification. And then for companies like Cytotherics, strategically it makes sense for them to bring in other investors that have interest in and around biotechnology, whether it's a clinician, it's other companies that understand biotechnology, private equity firms that only invest in biotechnology. There can be a number of reasons, and it can be very beneficial for them to have a diverse investor base. But it's pretty
Right.
rare I see somebody that will do a whole round or invest everything that they need. It does and can happen, but it's pretty rare. And what I've found a lot of times where I've had, billionaires invest in deals that I did a long time ago, and they at the time they would just write a 25, or no, it was 50,000. They would do a maximum of 50,000 in a private investment, even though they could afford a lot more. But it was kind of
Right.
their check to just say, hey, I want to get started and kind of see this and get going. So a lot of times they'll kind of have their own rationale for why and how they invest, but most of the time they want to see other people involved. So even if they're
Right.
worth a ton of dough, they want to
Right.
see other people investing to be able to validate what that company is doing, is what
Right.
I
Right.
find.
That makes sense. So now, other people being involved obviously makes it more attractive to other investors. They see, okay, well, other people have this some skin in the game. They've got some skin in the game. This is a little bit more attractive, right? Especially if it's a big name that's invested into that company. But for those companies that don't have any investors yet, they're not able to go to the bank because they've only got a few years in business. They maybe their credit's not in the high 700s. I mean, how hard it is to go to a bank.
Sure.
Where do those businesses, where should they be starting? If they've got a great product, they just can't scale because it's too costly. I mean, as we know, certain businesses, it's really hard to scale with your own money. In some businesses, it's almost impossible, right? You've got to, to raise those funds. Where's a good place for businesses to start to look more attractive to those private VC firms and capital companies like yourself?
Well, in the early days, or in the early days of a startup and so forth, a lot of times the best place to start is with friends and family. A lot of people call it angels. I prefer just calling it individual investors,
Yeah.
because there's really nothing angelic about it. It's just pulling together people who are able and willing to write a check and to support that
Yep.
business to where they're going, and that can be very helpful. But I
Absolutely.
think that kind of your part of your question there was asking, like, how can they prepare themselves to be able to attract that? And I think that's where it's really important, where we start our conversation, is to kind of come back to this idea of a magnetic vision, but being able to
Right.
articulate why this business is operating and why it deserves to live and where it's going. And that's a big piece of this, because what I have found is that there's two things in this world that move money: it's trust and it's emotion. Now,
Yeah.
emotion you can get fairly quick, right? Like I've seen it a number of times, like Cytotherics. Somebody knows somebody that died of liver failure and they're producing human liver cells. Like they have an emotional hook right away. Like, I want to
Right.
support that
You got an
company.
emotional attachment to that business and that product. Yeah.
Exactly. But trust takes a while. And trust, some people are good. They can build trust within a couple of conversations and so forth, but that takes time. And
Yeah.
so anything an entrepreneur can really do to help validate who they are, where they're going, to build that trust as efficiently as possible. I use efficiently and not quickly, because nothing quick about it, but if they can be efficient in
Right.
building their trust, like you've done a wonderful job with, like, your social media presence, producing videos and so forth. Now,
Appreciate that.
entrepreneurs don't need to be as, very few could ever do what you've done, but they can still get
Right.
a couple videos out there and to kind of build rapport so people can
Right.
find them elsewhere on social media channels and so forth to kind of validate on their own of who they are.
Absolutely.
And
You know,
so,
you brought up some really great points. You know, a lot of it is the person behind it, right? And I think a lot of the times as entrepreneurs, they try to keep everything separate. They're like, all right, they've got their life and their business life.
yes,
And one thing that I was taught very early on is you are your brand. You should be your brand. You are the brand, right? Like if you notice, there's not a single shirt I wear that doesn't have my logo on it, right? You have your logo on your
okay,
shirt. I've got jackets. My friends joke around. I just got married recently, and they're like,
I
"You
saw that. Congrats.
have you got her wearing Versa underwear yet?" And she's like, "You know, I'm sure it's coming."
Yeah,
Right. But my point is this: is like I think business owners need to stop shying away so much of trying to keep things separate and build it in their lives. Because I think when things are separate, there's no real connection there, right? Like you said, there's got to be an emotional connection to the business that really drives, like, why are you doing this? Like, it's part of the vision, right? Like, why are you doing this? I'm doing this because I want to help businesses grow and succeed. I've seen way too many business owners my whole life get screwed by all these different
exactly.
companies trying to sell them something that they don't need or isn't going to help their business. And so I want to mitigate that. I want to try and eliminate business owners getting, because it's hard enough growing a business without companies coming in and taking advantage of you, right?
Exactly.
So that's the emotional attachment to me because I got screwed early on as a child business owner, right? I didn't know any better. Even in my early adult years when I dropped out of college and started my first business, same thing, right? And I've just seen it happen time and time again. So that's my emotional attachment to it. It's like I've been screwed. I've seen so many other people been screwed that I want to help prevent that by sharing as much information as possible, helping them get good rates and terms on capital and so forth. Now, so your book, explain to us a little bit about what your book helps entrepreneurs learn. And we've talked all about obviously positioning yourself for investment, but your book goes a little bit deeper into that, right?
Very much so. So it all started when I was taking a tour of a manufacturing facility and seeing workers producing the product. And I finally clicked to me because throughout my whole career in finance, it really bothered me on how Wall Street started throwing around terms like EBITDA. And this
Right.
term EBITDA should not even exist. I was there writing research on public companies when the when the acronym was coined, and it was
Right.
because software companies had huge losses of non-cash expenses they were writing off, and they made up this term EBITDA to explain away all these huge losses, and unfortunately became very much mainstream. Now,
Right.
the good thing about it is it helps people focus on cash flow, but EBITDA by itself is a misleading number. We could go into that later. But when I was on that manufacturing floor, I realized what had always bothered me. I looked around and I said, this is where the value is being created, right here. The
Right.
culture, the people, the making of the product, the business systems that the owners had implemented to be able to execute. It wasn't EBITDA. And the problem with a lot of business owners is that everybody talks about their business as if it's a multiple of EBITDA of cash flow. And
Right.
that's not what drives value. So the
Right.
book really started off as a way to help business owners understand the real the real drivers of value. And so that's where in the book I outline the 19 real value drivers and really distill it down to the 9 components that really make it a breakout valuation to really help
Right.
entrepreneurs know that they don't need all of these. They don't need to master any of them. They're probably really good at one or two and they can focus in on one like magnetic vision. And that can be a
Right.
big piece for them to really create the real value that they have in their business. And not get distracted by an EBITDA multiple, that's as correlation. It's not causation.
Right. Right. Absolutely. Yeah. I mean, obviously we got to know our numbers. We got to know our KPIs, our profitability and all that. But I really try to not focus on the money. I try to not focus on the numbers, but focus on what we're doing, right? Are we helping people? does this deal make sense for this business? And are we going to lose money? If we're not going to lose money and it's going to help someone, it makes sense, right? And we just kind of grow off of that. I have a whole team of sales reps, and I tell them every day, does this make sense for them? If it makes sense for the customer, that's all you should care about.
Yeah.
Don't worry about your commission. Don't worry about what you're going to make on the deal. Worry about, does this help them? Because regardless, it's going to help you. Whether they write you a good review, whether they're super thankful and they tell everybody they know about you, whatever it is, it's going to benefit everybody. And that's what we try to do with every transaction, is make sure it's mutually beneficial for everybody. And that way everybody wins, right? And, I think a lot of the times business owners get wrapped up in, like you said, the EBITDA, the profit, the revenue, the numbers. And the real value is, like you said, it's the culture and, the things that the business is doing, where the real value is displayed, not in the numbers itself. So now, as far as, we touched on exit a little bit. Now, when you're investing in companies, is that something that you're looking at? Is their vision of an exit? Or are you looking for companies that are going to be around for a long period of time to continue keeping that money invested and growing that way? Or are you looking for more of a, hey, in 3 years, we can make, 20% return, whatever? Like, what are you really looking at as far as the vision goes?
The big thing is we're looking for the real answer. And I don't say that tongue in cheek, because a lot of entrepreneurs are coached to talk about an exit. That's really not their vision. It was what they were coached to say
Interesting.
through accelerators and so forth.
Right.
We want the real answer. And why that's important is I've had a couple entrepreneurs over the years that have actually broken down in tears when they kind of talked about what they want to achieve. And I said, what do you really want? What do you as the
Right.
entrepreneur want? And they're like, well, truth be told, I wouldn't mind if I run this for 10 years and I've got a daughter and maybe she wants to run the business someday. I'm like, great. I want to hear that. I don't
Right.
want to hear this fanciful story of like, I want to
Right. Of
pump
what
this
you
thing up
think you should say.
in
Yeah.
3 to 5 years and sell for $100 million. Cause I just know statistically, like, it's extremely, extremely rare. Now, the
Right.
whole venture capital industry is predicated on that.
Yeah.
So that's also why we have a unique way that we structure our investments. We have the way we structure our investments, and we call it an equity-based note. We'll take equity, but we structure it in such a way that we can get paid back over time. And that's really
Right.
important, because once somebody sells stock in their business, the only way, or not the only way, but 99% of the only way to get them out is to sell the business for cash to be
Yeah.
able to pay off their shareholders someday. And now their
Yeah.
shareholders may not say that they really mind and they're in it for the long haul, but it's guaranteed that someday some shareholders are going to wake up and say, hey, I need to sell my shares. I got
Right.
estate planning things, or something's happening in my life. I need the cash. And the only
Yeah.
way these businesses can do it is to sell it for cash.
Yeah.
And while there's a lot of activity in M&A, selling a business for a decent amount of cash is really, really hard. And
Yeah.
and the majority of deals fall through. And so, there are people that'll sell their business but trade for stock and so forth. Well, that doesn't
Right.
count. Like, if somebody wants to sell
Yeah,
their shares.
exactly. If you don't have the cash to pay out the shareholders, I mean,
Exactly.
it's,
And
yeah.
and the thing that really tears us apart is when we see entrepreneurs. I see it quite often, unfortunately, but where they've brought in angel or venture capital and they're on that treadmill. And
Right.
once they're in that hamster wheel, they can't get off. And we've seen a
Yeah.
number of times where VCs have like shut down a perfectly good business, but it didn't become the $100 million thing. It became a couple $1 million thing, but in the world of VC, that was a complete zero. So they just shut the
Right.
business down and took the write off. And so
Yeah.
that's what I think is really unfortunate, and why I just encourage entrepreneurs to really think strategically about how they properly capitalize their business and what they're looking to achieve long term, to make sure
Right.
those things are as lined as much as possible when they think about growing their business. Because
Right.
if somebody does want to hand it over to the next generation, do not go out and raise money from traditional angel VC. You're not going to have
Right.
that option.
You're
So
not gonna have, right. You're not gonna have much of a business left, right? They're gonna want a big chunk of those shares. And I've
exactly.
always we've always told business owners, if you can get the money without having to give up equity, do that,
Yeah.
right? Try
Yeah.
that first, if nothing else, right? So, that brings me, I guess, to one of my last questions is, if somebody wants to approach you, they have a business, they've been running for 5 years, they're ready to scale to the next level, they need some capital to do it. How does one approach a company like yours, or are you the ones that are finding them? Like, how explain to me how that process looks.
Yeah, our business is all word of mouth, and it's why I do things like this and why I speak
Right,
at conferences and so forth. But it's really all word of mouth, and so we promise anybody, any entrepreneur that reaches out to us, our team, we will have a conversation with them. So
right.
they can go to our website, hit apply now, or email me. It's all kind of doing the same thing, but we'll set up a call and spend 20, 30 minutes with somebody and kind of get to know them, what they're working on, and to see if it's a fit for us, or if not, how we can be helpful.
Right.
Because we can only invest in so many deals, and we're also members of angel groups and so on and so
Yep.
forth, so we can point them in other directions. But we always are happy to take meetings with entrepreneurs, and we host a number of events. We just had the entrepreneurs rally in Minneapolis 2 weeks ago. We had over 500 entrepreneurs at that event.
Awesome.
And we got Damon John coming to speak next year, May 2025. So we do
Nice.
events like that where we pull people together. But I just put that out there because people were happy to connect with people, invite
Yeah.
them to these events, introduce them to whoever could be a fit for them and where they're going in their journey.
Yeah. Absolutely. Yeah. We try to do the same thing. Even if it's not a fit for us, we'll try to point you in the right direction. So I'm glad we got connected.
Yes,
Where did you go to high school? Did you grow up in Minnesota?
I did. I went to St. Thomas Academy and then went to
Okay.
Creighton in Omaha for college.
I went to Hopkins. I was
Very
there.
nice.
Yeah, my sister graduated with Chris Humphreys, and I actually moved to Maryland my senior year in high school. So it's great. We both started businesses. It was 6, 7 years old in the mean streets of Minnesota.
Yeah, there you go. Yeah. Yeah. No, Hopkins,
um,
I live in Eden Prairie, so of course Hopkins is
awesome.
in the Lake Conference. And so
Yeah,
yeah,
Eden Prairie was my favorite mall going to growing up as a kid.
yeah, where Mallrats was filmed in something like in the 90s. So
Right, right. Well, very cool, man. I'm so glad we got to touch base. We're constantly coming across deals that would look incredibly valuable to somebody like yourself. Might not be a good fit for funding, but more of an investor type deal. So we'll definitely keep that in mind, and we'll make sure all your contact information is in the description so people can reach out to
sure.
you. You had mentioned something. You were doing a deal on your Kindle book right now.
Yes. Yeah. So published a book 2 years ago and just came out with the audiobook in the fall. And so we discounted the Kindle book to $1.99. And so, but the ebook and the hard soft cover audiobooks are available everywhere, but
Awesome.
most people get it on Amazon. So if you're a Kindle user, you can get that ebook super cheap right now.
Awesome. Cool. I'll make sure that link is in the description as well.
Excellent.
Awesome, man. Well, it was great talking to you, Patrick. I can't wait to have you go on again in the future and kind of see where we're all at. And man, you keep doing what you're doing. You're without guys like you, without guys like me, the
Exactly.
entrepreneurial world just kind of falls by the wayside. It takes a village in everything that we do.
Yeah.
It's cool to be a part of it, and
Well, thank you for
I
all
can
your
tell
work. Yeah.
yeah, absolutely,
And
man. I can tell you have the passion for it, and I appreciate that more than anything.
yes, yeah, likewise, and hopefully your audience got a few nuggets that was worth their time here today. So
Absolutely,
it's fun to have
man.
the
Absolutely. I
conversation.
know I got a lot out of it. I'm sure they did too.
Good, good, good. That's what it's all about.
Absolutely. I appreciate you, Patrick. You have a great one.
You too, Shaheen. Thank you.